Hey everyone, I am back with another video, and this time it's not some random credit card unboxing or a magic prank video, but I'm here to talk about investing. And yes, this is the right time to start thinking and talking about investing if you haven't already, due to the whole pandemic situation going on, because a lot of businesses have been available at good prices. So it's the right time to start investing and stop splurging on all your Amazon purchases and all the possessions that you have been wanting and don't really need them, and start investing so that you can grow your money down the line. So I would like to start this video with a quote from the legendary investor Warren Buffett, who says, compounding is the eighth wonder of the world, which implies start investing early. Each year in these 20s will pay you a lot down the line. I personally started my investing journey in October 2018, fresh out of college, with mere $100 when I got my first job. And over 1.5 years, I have built a portfolio of more than $60,000, mostly in stock market investments. So, and also to make this video a little more organized, I have split it into 6 levels of investing, and we'll be diving deep into one of the levels, which is stock market investments. All right, so level 0, or the first and foremost level of investing, is invest in yourself. It can be getting an advanced degree or doing an online course, listening to podcasts, reading books, basically improving your skill set and knowledge, so that you can substantially keep increasing your income, which you can then save, and eventually those savings can generate more income, and you can exponentially grow your net worth. Okay, let's move on to level 1, which is putting your money in a high interest savings account or a fixed deposit or a certificate of deposit with the bank. Very low risk, but of course very low return. And this should be basically just 6 months of your expenditure put into liquid assets like a fixed deposit or a savings account. And this should pay you off about 2% interest rate in the US, which just beats the inflation. And of course, in India, it pays a little more, 6 to 7%, but then again, it matches the inflation. I prefer keeping the money in the US than sending to India for fixed deposit investments, because you always have to convert it into rupee, and the rupee keeps declining, so it turns out to be a loss at the end of the day. Okay, so the next is putting your money into a retirement account like 401k and IRA in the US and PF in India. Both of them have a long-term outlook. So if you want a stable life and just want to save for your retirement and don't have any crazy aspirations, I think it's a good stable investment to make. And a lot of employers actually match your contributions into these retirement accounts. So at least contribute to up to the match percentage of your employer. And I would say about 5 to 10% of your monthly income is a good threshold to invest into these retirement accounts. And also a rule of thumb, target to spend about 50% of your income in necessary expenses like food, rent, mortgage, etc., and then 30% in leisure expenses, and at least 20% of savings. This 30-20 ratio can vary depending on how much you are willing to cut down on your leisure expenses, but at least target to save 20% of your income. And we'll be, so out of this 20%, we put about 5 to 10% in the retirement account, and the other 5 to 10% goes into the next level of investing, which is stock markets. I personally try to put about 15% of my monthly income. So that's like, if I save 20%, 15% goes into the stock market, and then 5% goes into the retirement account. But of course, this percentage can vary on your potential. And for holding stocks, you need an investment account. So I use the Grow app in India and Robinhood in the US. I'm leaving a link in the description below, so if you would like to check it out, you can sign up. And we'll dive more into the stock market part after I cover the level 4 and 5, which are the highest risk, but of course the highest return. Level 4 being real estate. So eventually you want to save up enough in the first 3 levels so that you can maybe take a loan and buy a house and start paying your mortgage and start building equity. And the 5th one, level 5, being doing a startup or like investing in a business directly, which is of course the highest risk but pays off in much higher return. So let's get right into the focus of this topic, which is level 3, stock market investments. So if you have enough money saved up in level 1 and level 2 and are ready to take the next step to level 3, and you have an investment account, I believe with any broker, I use personally Grow and Robinhood as I mentioned, and the link is in the description. Once you have them, I again split stock market investment into 3 steps. You don't directly go and buy stocks because that's highest risk, and if you don't know what you're doing, you could lose all the money. So step 1 being index funds and mutual funds. So index funds are basically you buying a whole index, so a group. So like you buy S&P 500, which is top 500 US companies. So one share of this index fund of S&P 500 will get you an equal share in all the top 500 companies in the US. So that way you have a very diversified investment. And even if 10 companies go bankrupt and another 20 don't perform well, still the other 480 will give you a good return through the years. And then similarly in India, you have mutual funds, and there are 2 types of mutual funds: equity mutual funds, which are more towards stock market investments, and then there are debt mutual funds, which are more towards corporate bonds, government bonds, so more stable return. But overall, mutual funds and index funds in the US are a good way to get into the stock market, get some exposure, start learning how the things work. And also, we being in the middle of a rebound from the whole COVID crisis, I think we are very unsure where the market could go. It could maybe hit the highs again that were in Feb, or it could go down, hitting further bottom. So we don't know, and it's a good way to get into the market. All right, so the next step 2, is basically looking for some blue chip stocks. Blue chip stocks being the top 10, top 20 companies in a country, and trying to research about them. For example, Facebook, Apple in the US, or State Bank of India, or Reliance in India. Research about these companies and figure out top 3 picks for yourself and start to invest in them regularly, so which is called dollar cost averaging. So you keep buying company's stock, a fixed amount of stock every month from your income, and over the months you basically average out. Even if there's a downturn, if there's a spike in the price, you still have a good holding on an average price. And as you keep researching and keep reading about them, you become more and more comfortable with stocks. For example, a recent news that went out was Facebook owning a huge chunk in Reliance, about I think 10%, which is a very strategic investment for Facebook and Reliance, because Facebook has WhatsApp and Reliance has Jio, and they are planning to change the whole payment industry in India. So kick out Paytm and all other payment apps and bring WhatsApp Pay. I think it's coming out in July. And then the other thing they're targeting is e-commerce. So they'll be cleaning up Flipkart and Amazon and launching e-commerce probably down, I think later this year. So that's a very strategic investment. I think I've heavily invested in Facebook and Reliance in India. So I think news like this and reading more about what companies are doing, studying their balance sheet, and understanding the whole business better will help you find good businesses at cheap prices. So remember, that's the goal here, finding good businesses at cheap prices. And which brings us to the step 3, finding these good businesses very early on before they actually get famous. So like identifying Facebook maybe 5 years back, that it could be a multi-bagger stock, it could give you 5x, 6x return over the years, would actually give you huge returns in the stock market. And that's more advanced level. I am at step 2 still and trying to move on to step 3, but it's a gradual process. All right, so those were the 5 levels of investing and 3 steps into the stock market investing. And if you would like to talk about stocks, and if you have some stock picks that you want to mention, drop them in a comment. And if you liked the video and it was useful, hit the like button. It helps the video grow and helps my channel grow. And meanwhile, I'll be making a detailed video going over my Robinhood portfolio, which is my US stock portfolio, in detail, and covering why I bought a stock and when and how much did I buy. And meanwhile, I make the video. Watch out for that, and stay safe in the pandemic and keep investing. Thank you.